Hi, this is Mike, and we're looking at the Nasdaq at the moment, but we're going to move to the Dow Jones because that's the main reason I'm making this video. I've decided to work backwards in this video because I've tried to make this video already 2 times and I'm having technical issues. So I thought I'd try a different approach just to keep it interesting for myself because it gets kind of boring when you record a 15-minute video and it fails to upload twice. So let's hope for third time lucky here. So there's a difference between what's happening in the Nasdaq versus the Dow Jones. And that is that the Dow Jones is not going to make an all-time high, according to my analysis, in this particular run. So my aim here is to explain why I think that's going to happen. So in my last video, I basically mentioned that, the long-term view is that we're in a new bull market. Since '08, this is the beginning of a brand new bull market. Now, before you get to the bull market part, you have to deal with the correction. Okay, now the correction is the one that's basically the complicated thing that really wrecks people, especially if they think that this is going to go straight up now. This also has implications for cryptos because I believe cryptos follow the same course in the markets, right? It's all based on human psychology and everything's basically against the US dollar. So if you're looking at it in terms of Bitcoin, for example, well, we know that Bitcoin started in '08, and this here is Bitcoin. Now, when you're looking at, altcoins, well, the 2015, 16, 17 portion here, well, that's the altcoin area, right? So either way, before you get a wave 3, you need a wave 1 and a 2. So no matter how long wave 1 is for either, wave 3 can be changing for any crypto. Like it could seriously change the story of how it goes. Just because a wave 1 is large doesn't mean that wave 3 will be as crazy as something that has a smaller wave 1. That's my opinion. Um, I'll talk more about that in another video because I really want to sort of dive into that a bit more. But in this particular case, we have a correction wave A, B, C, D, E. Now, every correction has an A, B, C, D, E. Regardless of Elliott wave, because I don't use Elliott wave, in case you didn't know, that's why the channel is called RS wave. It's because I invented the methodology called RS wave. And, I'd like to talk about it a little bit, but there is a course in development if you want to learn more. It's actually version 2 of RS Wave. It's going to be a little bit more in depth, but it's going to be delayed. Now, if you want to find out more about that, you can go to the website. So, in essence, just to sort of give you a bit of background, every correction has 5 waves, just like every impulsive move has 5 waves. There's only 2 patterns a market makes, a 5-wave move and a zigzag. And each one of those components, which is only 2 of them, has 3 variances. So there's 3 versions of a zigzag, 3 versions of a 5-wave move. Now, this is why you see a difference between what happened since 2017-18 in all the markets. That's the only reason why you see differences, is because of what I just said, right? These wave components of these corrections, A, B, C, D, E, they can be different in size, length, and duration, right? And these corrections happen in all waves. They happen in waves 2, 4, and B wave, a zigzag, this wave, B wave, right? So the difference between the Nasdaq and the Dow Jones is that the D wave is heading towards completion because the E wave in the B wave already completed. However, in the Dow Jones, that E wave is still ongoing. Okay. So as you can see, I've marked the same sort of thing out here in my previous attempt. So I'm kind of getting tired now. I'm like, I've got to take some more NZT, right? So same deal. We're looking at a new bull market, etc. But when you look closely at this particular correction that's happened since the end of that move down, there's a couple of things that's going on that gives me the feeling that this is going to go lower. There's going to be non-confirmation between the Dow Jones and the Nasdaq. So the first thing is the AB pattern, right? Now this can't be a 1-2 because wave 2 would have gone below the start of wave 1, right? So it's an AB pattern, and then you've got your CDE unfolding, right? So you've got zigzag 1, zigzag 3, and zigzag 5 unfolding. We cannot go above the red line because that would invalidate the 5-wave move down idea, because wave 2 cannot go above the start of wave 1 in this case, because we're looking at a 5-wave going down, a bear market 5-wave, right? So this pattern is definitely different than what's going on in the Nasdaq. The Nasdaq is producing a 5-wave move. It's already a large, more than 50% into that 5-wave move. But in this case, it's different, right? Now, I don't know if you remember, but this started to move up higher before the Nasdaq. But the Nasdaq kept going, this stalled, right? And that's the reason why. It's because it's not meant to go higher. So knowing the larger pattern always helps. And that's why I developed RS Wave, to give me an idea of what's going on so I can make these videos and also place trades based on my own predictions. Great. So that out the way, basically, like, I have to reiterate and say that, RS Wave is not Elliott Wave, right? Because Elliott Wave, let's think about this, was created in the early 1900s by some guy on his deathbed using printed charts before computers were around. So there's a lot of people still using it. I feel sorry for them. That includes Harry Dent and Robert Prechter, his friend. Like, these people are just blindly trying to use something that's really a relic of the past, outdated crap, and that's why they keep getting it wrong. But if you use this type of approach, it's very straightforward. There's not these subjective, flat, triple this, triple that bullshit patterns that they come up with. It really just helps you understand that, hey, it's a process. We're going to get there. In different markets, it's different. It really helps you understand that, yes, although human psychology is all pointing in the same direction, it's not going to get there in the same way across all these, different markets, right? This explains why I'm so bullish on cryptos. And yes, it's an amazing way to visualize it. Uh, Obviously, if you're a man, visualization is a pretty big thing, and it really helps you visualize that component, that aspect of the markets. So since '08, we're in a start of a bull market, and we haven't seen the full correction. Now, once we do get to the end of the D wave, we'll see an E wave come about 50% down. In the Nasdaq, I think it's going to be like 80%, right? So, the bigger they are, the harder they fall. You need to have a decent pullback. the Nasdaq has had only a 25% pullback since the end of wave one. So you can see why that needs to fall more, and it's going to fall earlier because, as I mentioned before, it's about to complete D wave, whereas the Dow Jones hasn't even completed the B wave yet, in brackets, of the D wave, right? This one here. So down and up versus Nasdaq up and then straight into that major move down. So that's my opinion. Actually made this video a bit shorter. Let me know what you think, and I'll go take some more NZT ready for the next video. Thanks.